The stock market is completely reliant on the Fed. We have fully established that at this point. After the downfall experienced throughout the final quarter of 2018, it has been understood that without stimulus, the market will remain stagnant or fall. Increased stimulus from central banks and governments must always be present for eternity in order to prevent a crisis. The central bankers have created a monster and the general public are unaware. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening in the markets in anticipation of the Federal Reserve's hike. I'm going to cover this right now and bring out that information prior to the hike because I want to show you what happens before and then after. This is the markets in anticipation right now, up 250 points. Yesterday was a positive day somewhat. You're seeing the Dow Jones just under 24,000 right now here, just prior to the meeting. And why? Why is this the case right now? The market has been in fear of the rate hikes. They've been scared. They've been anticipating this. They've been watching and curiously waiting what Powell and the FOMC have prepared. This is very strange that in the days prior to this meeting that's so important that the market is in the positive. If they believe the consensus right now is that they are going to hike, that's going to put a damper on their economy. It's going to slow down things and the markets will be subject to deflation. Why in the world are we seeing this right now? Well, it is the computer algorithms and their disaster that they have created, and they are pushing the market up at a time when it should be flat or down, if anything. Dow rallies 300 points as investors await the Fed rate hike decision. 300 points at one point today. It has been fluctuating, obviously, but specifically just in anticipation, you would think it would just be at flat, at even, or in the negative. Why in the world would it be in the positive if the anticipated result is negative for the market? It doesn't make sense. J&J vows to overturn the $4.7 billion talc verdict, but experts see hurdles. So Johnson & Johnson had this issue. The stock tumbled incredibly here. There's a negativity present in the markets right now, but the market is overlooking that. Let's not worry about Johnson & Johnson. Let's just focus on the Federal Reserve and somehow bring the markets higher even though it should be down. GE shares surge after longtime analyst Jeffrey Sprague gives his first buy rating in a decade. While the work ahead is still hard, we think the lack of investor confidence will slowly subside. That's the reason the stock went up, because of some analyst giving it a buy rating. My goodness, these markets are absurd. Computer algorithms are trading this thing and they are broken. There's no possible reason why this should make a stock surge. Nothing fundamentally changed with the company whatsoever. Just some analyst who could have been bought and paid for, that they recommended it, therefore the stock rises. It's broken. Give it up. Stephen Moore, the Fed has been way too tight. They made a major blunder 3 months ago with raising the rates. It caused a deflation in commodity prices. And I will say this, David, if the Fed raises interest rates tomorrow, this was an interview yesterday, they should all be fired for economic malpractice. No. Let me backtrack just a second here. The fact that the Federal Reserve controls interest rates, that is absurd as far as I'm considered. Number two is the fact that they have brought interest rates down to record lows. They should all be fired for that reason, not because they've been increasing rates to trying to normalize, trying to get them to a normal level. No, you're suggesting that bringing them up to 2.5% is so disastrous. Are you kidding me? This market needs higher interest rates, and if that means a deflation in asset prices, then that's a good thing. That's a healthy thing for the economy. That's a healthy thing for the markets in general, but you don't want it because you don't want to see deflation in the assets. You got skin in the game and you're scared. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. Just hit that button to support me. If you want to comment, just leave one below. I read them all. I try to reply to as many people as I can. I give the little thumbs up and the little heart icon there as well when I see them. There's just so many coming in. That's all. If you want the financial education you were not taught in school, then I've got 2 books for you to read that are just jam-packed with data. So check them out at the link in the description. If you want the audiobook version, you can get that at themoneygps.com.